Hi everyone, welcome to Wealthy Mindset. My name is Oliver. Thank you so much for watching. I really appreciate it. I hope you guys are having a great day like always. In today's video, I'm going to be covering BlackBerry, GameStop, AMC, Nokia for March 19th trading day, giving you guys the lows and the highs like always by analyzing the graph. Now for the first 50 to 60 seconds, I highly encourage you to watch that because I'm going to be covering the overall market. And then after that, you could go to the description down below for the timestamps for the specific stocks that you want to watch within this video. And then before I begin to that, quick disclaimer like always, I'm not a financial advisor. I'm not a professional. And everything I do share with you guys is just my opinion. It is not advice. So please do not buy or sell based off the information I give you or the opinions I do form. And I do own shares in BlackBerry, been holding for 6 years. So long-term investor overall. And keep in mind that I could be more biased for BlackBerry. So just be aware of that while you're watching this video. If you look at the overall market, I have been covering the Dow Jones mainly. The only thing is what's wrong about that is the Dow Jones has been going up, so that is good. My predictions have been correct overall in general sense. But the only thing is it would be going up and then everything else is going down. So there is a disconnect because the Dow Jones is only the top 30 US companies. S&P 500 covers 500 companies overall. So that would give more of an overall sense. So I'm going to be doing a more deep dive for the S&P 500 in the future. But in the meantime, I did a quick analysis, and we have an upward trend support line right here dating back since November 2020. And if it holds through, so essentially what I think is going to happen for the most part is if you're not optimistic, but not optimistic, but a little bit thinking of the downside, then what could happen is we could come back down to this upward trend support line and bounce up to the upside. And if you think that's going to be the case, you're looking at 3,800 points, roughly give or take, 3,802 points, somewhere around there. But the thing is though, because we're above both short and long moving average, and the MACD line is in the positive, even though it's coming down, I think what's most likely going to happen is we're going to bounce off either the short moving average or horizontal support line. So there was a horizontal support line at the 3,838 points, 3,840 points, somewhere around there. And then there's support on the horizontal or the short moving average. If you're thinking that's what's going to happen and bounce off to the upside off that, so essentially like this, then go to the upside, then you're looking at support roughly, depending on when you meet it, basically about 3,868 points, 67 points, somewhere around there, so about 3,866 points, I guess. But depending on when you meet it though. If you meet it later on and you keep dropping, then it'll get lower. If you keep rising and then come back down steeply, it'll be up higher, stuff like that, etc., etc. Now, if you think it's just going to break through this upward trend support line, I would start getting worried if you break 3,733 points for the first level and then 3,700 points clean. And I saw it was like 3,699 points. So essentially anywhere, if you basically break 3,700 points essentially, and it's dramatic, actually break through fully, then I would start getting worried because this upward trend support line is essentially it's going to be past false breakouts, past everything else. So you could have a false breakout, could bounce up to the upside, but if you break any lower than 3,700, I think it's going to be trouble ahead, essentially. But I'm ultimately bullish for the stock market. I have a video about that I'll link down below in the description as well if you want to watch that for reasons in terms of the stimulus bill, unemployment numbers, bankruptcy numbers, I go through a bunch of stuff in that video. So I cover that. And if you're interested in that, definitely check out the past 5 videos or something like that, or I'll link it down below. Now, if we go to the Dow Jones that I've showed in the past, if you go to the 5-year chart, S&P 500 was the 1-year chart, by the way. We have the upward trend support line dating back since 1999, and then we couldn't pass it in dot-com bubble 2000, but it was a false breakout. Then couldn't pass it in 2018 right here. Then couldn't pass it in just before the pandemic. So just to show you, right here is the 2000, and then right here 2018, and then just before the pandemic came down, pandemic right here, and then had a V-shaped recovery, one touch point, second touch point, and then third touch point right here, and then we came down. Now this is one of the reasons why I'm optimistic in terms of the graph. So if you look at the graph, we passed the upward trend support or resistance line dating back since 1999, 2000, and passed it right here, stayed above, technically bounced off as support, except if you zoomed in more, you could see we had a false breakout and we were about to get stuck, but then the stimulus bill passed. So that was a good catalyst to the upside. So that worked out, just perfect timing, I guess. And then went up to the upside, and we're above on the upward trend support line right here. Now, what could happen is, like I stated with the S&P 500, I think what could happen for the next, like the markets overall, they might be trying to come back down to the upward trend support lines that they're trying to meet, and then bounce off them to the upside. Now, that is a scenario. It's not guaranteed. Take everything with a grain of salt, by the way. Nobody knows for sure, but that is a potential. And specifically for the Dow Jones, what could happen is we could come back down to this upward trend support line, or upward trend resistance line, dating back since 1999, 2000, and bounce off to the upside. But just like the S&P 500, we're above both moving averages. I believe the S&P, we're above both of them, short and long. And then the MACD line is also in the positive as well for the Dow Jones. This one's not curving down, but this is the 5-year chart. Maybe if we went to the 1-year chart, let's just try it out. No, it's technically trying to curve down. So it almost looks like it will come down to the upward trend support line and potentially bounce off it, like I stated right here. So keep in mind, nobody knows for sure, but those are the potential plays. Now, if we go to BlackBerry, for BlackBerry, I want to show one quick thing before I get to it. So we have earnings coming out in March 30th, 2021. If you're watching this video in the future, just keep in mind it's March 30th, 2021 for the earnings date coming up. Now, I'm optimistic for the earnings, but there could be a little bit of turbulence what I'm going to show in the graph, but I want to show something that's important. We have shares shorted as of January 29th was 20.41 million shares. But then if you look at February 26, 2021, it increased to 43.03 million shares. That's an increase of almost 23 million shares shorted. And mainly it was all in the last 2 weeks of February, because if you looked at February 12th or February 16th, I think reported shorted interest kind of stuff in terms of holdings, it looked like it barely moved from this 20.41 million. So majority of the spike came at the end of the last 2 weeks. So keep that in mind. So we're pretty much between 7 to 9% shorted. And then if you look back at December 29th or December 26th, I can't remember the reported date, it looks like it was almost around this ballpark. So we dropped down. So if we went to 7 to 9% shorted shares in December, and then dropped down in January to 3 to 4% shorted shares. And in February, we came back up. But the thing is, though, in February when we came back up in the last 2 weeks. So that's a massive 23 million shares shorted in 2 weeks is huge, in my opinion. But we came back to the same levels as of December, hypothetically, 7 to 9%, give or take. Now, for BlackBerry, if you look at the 1 month moving chart logarithmic view, we had an upward trend support line right here that in the logarithmic view, if you go to the 1 month chart, it just works out perfectly. That's just like, it just basically bounced off it. But then the algorithmic view looks more cleaner. I'm just going to show it quickly. Essentially what I'm showing is there's an upward trend support line dating back since October 2020 right here. And you can see multiple touch points, but it shows better in logarithmic view at the moment what I'm trying to show. And we have a downward trend resistance line dating back since the ultimate high of 2008. And it goes through here, broke through it with the Amazon news in December 1st right here. And then came back, bounced off it, went up to the upside. This was the Reddit stuff community spike on all that stuff. Now, if you think, okay, so I'm going to cover the upside and the downside. I think what we might do is consolidate on the side a little bit, and I'm going to explain further. So right now we're at basically 1076. This is without pre-market. Keep that in mind though too. And essentially, if you think it's going to come back down to this upward trend support line right here, then you're essentially thinking if it does it tomorrow and if it does it quickly, we might see 963 for a quick dip. And you might want to place your orders hypothetically if you're optimistic for BlackBerry overall, you've done your research for the company, you're investing for the long term, and you think this upward trend support line is going to hold and it's not going to break it. And if that's the case, then 963 would be a good entry point. I would have to check logarithmic view actually, which I didn't. I apologize. I probably should have done it. But in terms of, or not algorithmic view, but in terms of the logarithmic view, it is good support at 963, and it would have to do it hypothetically tomorrow, maybe even Monday. But I don't think that's what's going to happen. I think what's going to happen is I think we're probably going to trickle down because, so I know I'm jumping all over the place, but if you've seen my past videos, there was a downward trend resistance line that acted as more support in the past, like right here, support, that I thought we were going to pass and have it mainly as support, not as resistance. But unfortunately, in this view, it does not look clean, but in another view with, I think it was like the 5-day moving chart or something, it's like just perfectly, like just knocks us down. We don't even pass it fully. But here it's showing us passes, but it was just false breakouts, came down. Now we have multiple downward trend resistance lines as well. There's 2 more. I just don't show them here. I just show this main one right here that's keeping us down. And I think it's going to be issues a little bit passing it. So we're below the short moving average. We're above the long moving average, but we hopefully bounce off it. If we don't, we're going to continue on to going lower than it. And I think we might go lower than it, unfortunately. Because again, I do own shares in BlackBerry, but we have the MAC line in the negative, and that's why I think it might come down. So if we go lower than 1070, we have support as 1072, by the way, 1072, 1074, 1078, we're below that anyway though. But we have the long moving average as support, which is 1060, somewhere between 1061 to 1069, depending on when we meet it. And then we have support at 1044 to 1054. Now, there's a little bit of a play that I'm going to explain the consolidation part, but I'm going to explain this first. So 1030 to 1040, we have a lot of support right here, horizontal support and the upward trend support line right here. So we have an upward trend support line here that, and some of you guys might be like, oh, where's the touch points? Just because some people are like, oh, these lines are not that great because they don't have that many touch points. When I zoom in, they have, trust me, more touch points. I've checked them earlier, but here's a touch point and all that stuff, and multiple touch points throughout the whole entire time, like 2 right here, just FYI. And so upward trend support line right here, dating back since February 26th, and then an upward trend support line right here. We have the 3 touch points right here. This one's 3. This one was not a touch point. And so if these hold us through, right, we have major support 1030, 1040. I think most likely what will happen for tomorrow is, if you're optimistic but you're thinking it's going to go to the downside, unfortunately, then I think it's going to hold somewhere between 1030 to 1040 on the worst side, and then 1044 to 1054 to the optimistic upside, but like down / consolidating, right? Hopefully it doesn't. Hopefully it bounces up to the upside. And essentially what we're trying to do is either bounce up to the upside here on the long moving average, or bounce up on the upside on one of these support levels and go through here. Now, what I'm trying to state is the consolidating, because there's something important to state. So I don't think necessarily we're going to see the 963. I think we're going to meet this upward trend support line, but on like March 23rd, March 24th, because I think what's going to happen is we're probably going to like bounce on these upward trend support lines, probably get knocked down by this downward trend resistance line, just keep consolidating at one point or something, and then meet at like pretty much the low 10s somewhere, like 1015, 1011 by March 23rd, 24th. And then the last week before March 30th, because it's, again, they're reporting their earnings on March 30th. Given the last week, I think we'll start running up again. That's the only thing. But the thing is though, how high will we run up? We might get knocked down by this downward trend resistance line, unfortunately. So we'll see. We're gonna have to assess it like week by week or day by day and go from there. But either way, so after 1030, 1040, I'm gonna cover the upside, but I'm just gonna finish off the downside. We have resistance at 1027 to 10, or support at 1027 to 1037, and then support at $10, $10.02, $10.05, 1011, and 1015. Now, I personally don't think we're gonna go lower than this tomorrow, but if we do, again, like I stated, there is like support levels at like the 1090 or 990, 988, 983, stuff like that. But if we were to come down dramatically, I think we could potentially see the 963, unfortunately. That's why I didn't necessarily include the levels in between. Now, if we go to the upside and bounce off to the upside, like I stated, and break through this downward trend resistance line right here that we have, you can see 3 touch points. They're pretty amateur, but they're still 3 touch points nonetheless. Then we have to bounce off and break through these levels, which is 1088, 1092, $11, and $11.04, which I believe broke this upward trend. No, actually, okay. So this is a level that we might get knocked down, that I've stated in the past, where if you've seen my past videos, 1104 is a pretty significant number, which funny enough, it actually correlates with this downward trend resistance line. So we might get knocked down because not only is this a strong resistance line, 1104, but this downward trend resistance line might knock us down at the right time, depending on when we meet it though. It's not a guarantee that that price point will be the one we meet at when we get to it, but it could be potentially it when I measured it. Then we have 1115, which I guess would pretty much confirm that we passed it, but again, depending on when we hit it. Then 1127 to 1129, 1138 to 1148, quite a bit of resistance there, 1150 ultimately there. Now we have a lot of resistance at 1138 to 1148 to 1150, but the thing is though, just to keep in mind, if we pass 1161, then that would be a good sign of a reversal, and specifically because we pass a short moving average as well once we hit 1150. So it depends on when we hit it, but the short moving average right now is at 1144. So passing 1148, 1150 would be a good sign getting into the 1161. Now we need to pass 1161, and that would be like a not guaranteed sign, but a good sign that we actually reversed fully, hypothetically, but we could get knocked down again by a downward trend resistance line. The utmost max, in my opinion, for tomorrow would be 1172, because I remember I measured massive horizontal levels where it just hits 1172 a bunch of times. The only thing is though, it wasn't that many times that we can't pass it, but I think we had enough touch points from what I measured. 1172 would knock us down. If you're completely optimistic, we would get into a $12 price point. There is more resistance levels before 12, but I'll include them in the comment down below and pin it if we end up hitting higher than that. I personally don't think we will. So, but if we do, I'll comment down below and let you guys know. Now, if we go to GameStop, essentially, it's kind of iffy for GameStop, and I'll explain why. So we have upward trend support lines right here dating back since September 2020. We have upward trend support lines dating back since December 2020 right here. And the reason why I'm mentioning it is because right here, it's almost like a flip of a coin, because we have a double downward trend resistance line right here. This one, trust me, it's a touch point right here too as well. But we have the upward trend support line that I've showed in the past, right about here, multiple touch points if I zoomed in more. And it's technically like almost helping us go to the upside. The problem is we're below both short and long moving average, and the MACD line is trying to cross over to the positive, but still in the negative. So it's questionable. It's like in the pre-market, if the pre-market's going to knock us down tomorrow and we're going to stay underneath the downward trend resistance lines, then we're kind of pretty much like a little bit like in down, like I don't know, it's not going to be looking good, right? It's not going to be looking pretty for tomorrow. But if we break through it and go to the upside, then we have the short moving average and the long moving average to break through, plus horizontal resistance levels. Still optimistic that I think you guys will be good, because I believe you guys are still shorted about 50% of the stock in terms of float and 30% in terms of outstanding, or 20% in terms of outstanding. Can't remember, but still quite a bit of shorted positions for the stock overall. And I think those numbers might be updated since the drop on March 10th, because I think this was a short position sale order, because what happened was AMC and BlackBerry were dropped at the exact same time dramatically. So that was a little too coincidental to be just massive orders at the right time by multiple amount of people. I think this was more of a short position sell. So the numbers I gave you in terms of 50% float shares shorted was as of February 29th. So, or February 26th, I think. February 26th. So if that's the case, then yeah, that could be increased shorted positions as of March 10th. So it's probably even more shorted than 50%. But either way, so I'm going to cover the downside first, and then I'm going to cover the upside. If you were thinking that tomorrow, March 19th, is just going to go down completely, then you have support level, like I've stated, quite a bit at the $200 price point. Hopefully holds us through. But if not, then you could drop down to the 190 as well, like we had earlier today, that I've mentioned before. You have quite a bit of support throughout the 190 level, and you can see today 195, and then you would trickle down to 187, 188. Hopefully that would hold you through. If not, then you have 172 to 174, and then you have decent support at 169. So 172 to 174 to 169 as well included. And you can see right here, this is just going to be an amateur showing kind of thing, but you have support right here at the 171, I guess, and then support right here at the 174. So you can see these quick drops, and yet it bounced back up. So if that does happen, you guys come down, hopefully it's enough support throughout this level to bounce you back up. Technically, it could be a good entry point if you wanted to hold up for the positions in the future. And then if you're trying, I don't know if you're getting in and out, but if you're getting in and out, you'd probably buy at 170 and then sell at 226, 228. But then technically you wouldn't have diamond hands. So what do you do then, right? So I don't know. So whatever. But either way, so if you keep dropping lower, and then you'd be at 152, 150 as support level, The only thing is, keep in mind, by the way, take everything with a grain of salt. Nobody knows for sure. These are things that I've measured, and like even if I'm right in the past, that doesn't mean I'll be right in the future. So just, again, take everything with a grain of salt. Do your own due diligence and research before buying and selling. Just want to make it clear too, though. But after that, you have support at 140, then 136 to 130, and then hopefully you guys bounce off. If you continue, there's a reason why I'm going through this list, because I want to talk about these upward trend support lines dating back since September 2020 and December 2020. So hopefully you guys bounce up to the upside at 125, 126. There's quite a bit of support there that you could, but it's not major support. The major support, in my opinion, from what I've seen, was 119, 118 level, 112, and then the problem is at these levels, you don't necessarily bounce. Like, for example, the $100 level, there's a lot of support at that level, but I don't think it's necessarily enough to like essentially be a bounce. It'd be more consolidating and then hopefully recovering to the upside after over time kind of thing. Then you have support at $97, then $86. Yes, you have support at, like, for example, the 95 and 93, I think it was, I can't remember, but these are like more the major levels that I'm trying to include. And then what it is so the upward trend support line dating back since September 2020 is $84 if you were to come down here and bounce the upside. So essentially, if it was dramatic, come back up like that, like come down, bounce off, and go to the upside. But that would be $84 price point. And then if you want this upward trend support line dating back since December 2020 right here, multiple touch points throughout, then you're looking at $73 price point. So there's that. Now, if you go into the upside, what you're trying to do is, first you need to obviously break through these downward trend resistance lines, but you need to break through this short moving average, because that could knock you back down. And if that's the case, it's 210 to 219. And then you're looking at, 210 to 219, short moving average, depending on when you're going to meet it. That's the problem. So right now, if you were meeting it early in the day, it would be hypothetically 210. Later in the day, it would be like 219. And then if you go past that, you're looking at basically 243 to 230. Now, the long moving average could knock you down at 230, but depending on when you meet it, 243 could be in play as well. The problem about 243, it's quite a bit of strong resistance at the horizontal level as well. So I measured at the horizontal level, and it's quite a bit of resistance at 243. So this might be a major task on its own, right here, 230, 243, and then even 219, because that reminds me, right here, just today, you guys had issues passing 218, 288. So that could be difficult on its own, because the short moving average is still in play, like right there. And if you were thinking that it's going to continue on the upward trend support line, regardless of like false breakouts to the upside, false breakouts to the downside, and you continue on the upward trend support line nonetheless, like technically like hug it for the rest of the day kind of thing, or not even just hug it, like go to the upside, get knocked down, go to the upside again, get knocked down, and just finish off at the end of the day, you're looking at finishing off at like 12.14 to 12.19, somewhere around there by the end of the day. Hopefully you guys do at least go to the upside, and that would be like hypothetically the worst case scenario for the upside, because you definitely don't want to just break through and keep going down to the downside. But we'll see. But after that, then above 257 will be a good sign for a reversal to the upside. Again, nothing's guaranteed, but I would take that. Like, yes, you're going to the upside, and hypothetically that's a reversal to the upside. I'm just trying to cover that if you go to the upside, hopefully you don't get knocked back down. So hopefully 257 would solidify that, passing 257 would solidify that to the upside as a reversal, like somewhat guaranteed. Then you have 269 as an issue, then 277 to 281 as an issue, and then 292 I see personally as an utmost max for tomorrow, except keep in mind this stock is extremely volatile. So I've seen at times where it's just like, yeah, this is the max, and like it stops it for quite a while and just spikes through like nothing, like no tomorrow. So that could happen, but I think 292 would be an issue for tomorrow. But we'll see. I'll comment down below and I'll pin it if anything drastic happens where it just passes these levels completely to the downside or the upside. And that way, at least you guys are kept up to date. Now, if we go to AMC, AMC is looking pretty good actually overall. You have an upward trend support line right here that I've mentioned in the past, dating back since January 2021, and touch points all the way through, false breakout. But in the algorithmic view, it actually doesn't count as a false breakout, but this is a logarithmic view. I'll elaborate more if we end up coming back down to test on it, but I think we're in good shape. Have an upward trend support line right here. We're above both short and long moving average, right? and the MACD line is in the negative, so that is a bad sign, but it looks like it's curving to the upside. So that's why I think this is the best viewpoint to show it in, because essentially we could be going back up. Now, I'm going to cover the downside first, and then I'm going to cover the upside just in case. So if we go to the downside, we're at $14, give or take, $14 exactly, I guess. And then if we were to go down, we have support at 1392, 1373, 1363 to 1315 range, and that would meet the short moving average, by the way. So what I mean by that, just in case if you're a new viewer, what's happening is if we meet the short moving average, hopefully bounce up to the upside off it as support, because when you're above the short and long moving averages, you could use them as support. When you're below them, they'd act as resistance. So ultimately we'll be at 1350, I guess. 1363 is mainly horizontal support level, but between this level, one point will meet the moving average. So 1363 to 1350, then 1342, 1322 to 1320 as well, and then $13. Now, I think personally, you guys, I don't think you guys will drop lower than this level. So 1279 to 1283, to basically 1260, because there is a good amount of support, but it's not crazy amount. But the thing is, the way you guys been performing, I don't think you guys will drop lower. But if you did 1249, 1223, 1198, there's a reason I'm mentioning these though, because I want to get to this long moving average and these upward trend support lines dating back specifically for the January 2021 one. So if you were to drop lower, then you're looking at, where was it? Right here, 12. So 1249, 1223, 1198 to 1205, 1202, and I believe it was not right here. So 1189, then 1173. So 1173 is the upward trend support line, plus the 1173, I believe, was the long moving average right here when I measured it. So you got the long moving average as support, plus the upward trend support line as support too. So that's quite a bit of good support right there. But then if you break it, so 1162, if you're not positive, or if you're optimistic for a bounce to the upside, but you think, no, tomorrow we're going to just drop for some reason, I don't know why, but potentially you technically can, because the markets could be down tomorrow. From what I've showed, that it could be curving down for the markets. But if that's the case, then 1162 I think would be a good entry point. That's just my opinion, not advice. But 1162, because there's quite a bit of horizontal support at 1162, and then there's the upward trend support line as well as the support level. Then you got 1149, 1150. Actually, I'm not going to mention these ones because I just wanted to cover at least the upward trend support lines as the worst case. But the worst, actually, wait, that does include it, I guess, or no? Sorry about that. No, that, because when I measured it, because I was like, right now it's just doing the amateur measure, I guess. But in case if you want to count for false breakouts, in case if I measured it wrong, it's 1149 to 1151.55. Just keep in mind just in case. And there could be potential false breakouts. So even if we were to go to the upside and break massive levels, which I'm going to cover right now, the downside could have false breakouts too, and then it could bounce back up to support levels. So keep that in mind. It depends on the style of the way you trade. Now, if you go to the upside, the thing is though, we have to break 1424, then 1450 that we've seen in the past. So 1451, we've seen the issue passing that yesterday. I think it was yesterday. And then 1454 today. So 1450 is quite a bit of resistance. You can almost pretty much see right here that passing it was already an issue multiple times. And then we have 1484. And then I think these are going to be main issues, because I think tomorrow, I think you guys might be good. The problem is the market might drag you down. That's the only issue. But 1506 will be definitely an issue passing tomorrow, 1506, 1530, and 1557. Now, I think personally this would be the ballpark of the max range for tomorrow. If you guys go catabolic like you guys have been going in the past, I'm just going to add the quick viewpoints that I saw, which was, yes, there is resistance between $15.57 to $16, but ultimately if you go like beyond like catabolic like crazy for tomorrow, then I'm assuming you just go through them like nothing. So $16 is resistance, $16.30, $16.60, and I want to get to this. There's a reason why I included these numbers to get to this. You guys have major resistance at $17 to $17.50, to the point that if I showed you on the left side of the graph, there's just pretty much a massive horizontal level where between $17, there's like resistance at the low 17, resistance at the mid 17, and then the high $17 and like 40 cents, $17.50, so $17.36, $17.06, like just a bunch of resistance levels at that point where just pretty much it would end up knocking you guys down. Like hopefully you guys reverse to the upside at one point and then continue to the upside like you guys have been doing. but I think it's going to take you guys quite a while to pass essentially 1750, I guess, for the utmost max. But I wouldn't be too concerned about that right now, because mainly for tomorrow, if you were to consider like baby steps, depending on how you guys move, I would assume that hopefully once you pass these $14 levels that I mentioned, the next levels that you guys would pass over time, hopefully with ease, would be the 1506, 1530, 1557, mainly 1506 and 1557. Those two would be huge. So if you were to continue for the rest of the day, then essentially what you're having is probably closing around it's like somewhat measured it. So if you're optimistic to the up, like if you think that it's going to continue on the upward trend support line right here, when I measured it, it was between 1450 to 1484. But I think if you guys were to go to that level, you guys would spike up to the $15, just to keep in mind for that. So it depends. It's hard to tell, because sometimes the way this stock's been moving, it's been extremely volatile. That's the only issue. One more thing I want to mention also is in terms of short positions, as of January 29th, you guys had 37.72 million shares shorted, but then it spiked up to 55.49 million shares shorted as of February 26th. And I'm pretty sure this was the last 2 weeks of February, because the February 16th or the February 12th, in terms of reporting, was not this high when it got reported. So the last 2 weeks of February, the short positions increased dramatically. So just keep that in mind. That could be like definitely, because you guys are holding up pretty well for in terms of how much it was shorted overall, like for the past 2 weeks of February, and still going up. So that's pretty good in my opinion. Now for Nokia, you guys were doing pretty good. You had a double upward trend support line right here. Unfortunately, you broke through it. You had a downward trend resistance line, caused a false breakout right here, went up to the upside, and then got knocked back down underneath the downward trend resistance line. Now, hopefully you guys bounce back up to the upside at the 391, because there's quite a bit of support right here you could see. And then if you want to count for false breakout, because what could happen is you might go to the upside and then get knocked down again and then go back down right here and then hopefully break through. If that's the case, you could hit 390. Now, if you break through 391, 390, you have support at 388, like I mentioned in the past, 386, 384. I've seen 383 a bunch of times, so I'm going to include it. Then 381, 380. I don't think you guys will go lower than 380 if you were. You have seen 377 in the past too as well, but I don't think those will necessarily be in play. But in case 377, 375 has major support levels, so that would be good to hold you guys up. But I think at one point you will reverse to the upside. The only problem is there's a chance you might not, but there's a chance. This is the reason why I'm optimistic. So yes, you're below both short and long moving average, which is not ideal, but the MACD line looks like it's trying to cross over to a positive, and looks like it technically did with that one green spike right there. So hopefully it holds through where you break through this downward trend resistance line, but it might be difficult. But at least hopefully when you come back down and bounce up to the upside, hopefully it'll be enough momentum to break through it. Now, if you do break through it, then you have issues passing 395, 397, 398, $4, $4.02, and $4.03, and $4.05. It kind of sounds like I'm just mentioning everything, but I'm actually not. These are just literally major resistance levels. That's the problem at these price points. And if you're trying to pass the long moving average, because it'll act as a resistance, unfortunately, hopefully not, but if it does, it's 407, $4.07 will act as a resistance. Then you have resistance at 413, 410, mainly 413 to be honest, and then 417 to 415 for the short moving average to pass it as resistance. So these are going to be pretty big overall, to be honest. It's going to be quite difficult. I don't see you guys passing these, but if you do, then if you've seen my videos in the past, 422 is going to be a major resistance level again. Yes, you have passed it in the past, but you guys got knocked down, unfortunately. That's the downfall, and you're going to have to pass this once again, 422. If you guys end up passing it, I'll keep you guys posted. If you've seen my past videos, you probably most likely already know the levels that we need to pass for the upside. But in downside, I'm going to have to keep you guys updated day by day. But overall, I would not be too worried, because like I've shown in the past, like let's see. So if we go to the 5-year chart, you had a double downward trend resistance line dating back since 2001, I believe. Yeah, right here. And you guys got knocked down. But if you look at here, the upward trend support line, you have one touch point, second touch point, and you're still above it. So you have this ultimately upward trend support line dating back since March 2020. So hopefully you guys have that in play. You didn't bounce off it right now recently. I know this looks like a mess, but you had this horizontal support line holding you up. That's what bounced you up to the upside, and you're pretty much right about here, because can zoom in and actually see it. But I don't know, maybe let's just say here, but you're still above it, so you're still in good play, and hopefully you guys hold through to the upside completely. Now, that's pretty much it for the video. Thank you so much for watching. I really appreciate it. If you guys did like it, consider dropping a like. It does help out the channel a lot. Thank you so much for that. If you do like videos in terms of stocks, videos like these, passive income, mortgages, credit scores, financial freedom, consider subscribing. It does help out the video a lot too as well. So thank you so much for that in general. Overall, thank you so much. If you have any questions, do not hesitate to ask. I'll try to answer them as soon as possible. And that's pretty much it. Thanks again for watching, and I'll see you guys in the next video. Peace.